Welcome. This is Tax Pro Nation, the home of the independent tax professionals, where you can find a tax community, maximize your earnings, and live life on your own terms. I'm your host, Imelda Ledesma, COO of Pronto Tax School. In this last episode of S Corp Returns, Andy and Daren will lead the conversation on accountable plans and the value that clients get from the service you provide.
All right, just as we wait for Daren to get on here, wanted to give you an update on the step-by-step S Corporation process document that we've been building over the last. This is part 7 of that series, so this is actually going to be the final part, and I should be able to get you guys that document, the final draft, or at least the final for now draft, by Friday of this week. And it'll be the kind of document where you can, really customize it according to your needs. I've taken in a lot of different perspectives from Andrea, from different people on the meeting. So you'll recognize some parts, if you've been attending this series. With today, I think what we want to do, once Daren's on, is really remember that it's not just about our process, it's about the value that the client actually gets from the service, right? That's what's actually most important. And so today's topic, the accountable plan reimbursement, I would say is really a major element of the value that a business tax client gets from our service, and is something that once you do that for a client, help them do that, they really have a new appreciation for your service. Hey, Daren.
Good morning.
Did you want to kick us off by asking if anybody else has any other questions, or do you want to go right into accountable plan discussion?
I was going to vent for a second.
Do it.
If anybody uses Calendly with multiple team members, they have a new permissions thing that now makes you buy a user for every person just so that they can edit the Google Calendar with the interaction. Yeah. Very annoying.
Revenue streams.
My whole office got shut down. So everybody had access to my Google Calendar, which interacted with Calendly, and everything worked beautifully. And then all of a sudden, out of the blue, basically all of my employees could not edit the Google Calendar, and it was all because of the Calendly extension. And we finally figured that out. And then finally, after a day and a half and 3 hours of installing, reinstalling everything else, I got into the Calendly admin portal and got under permissions, and there's this little blue box that said new. And I just bought the $150 yearly subscription for one employee to test it to see if it worked. And now it all works.
Nice.
In which I'm not complaining that I was getting. It's not like my sister's Netflix subscription that I had to log into got cut off. They don't make their own Calendly appointments. It's just for them to manage mine. So they're not even really using Calendly. So it's not like I was getting a free subscription for them to use it and book online and do all kinds of stuff. But now I got to pay for them just to. So there's that. So if you have employees in Calendly, plan for that. Or if your Calendly quit working, that's fine.
Yeah, interesting. The team integration of the different softwares when there's multiple people involved can definitely throw a few hiccups at you. So I get that.
Yes.
So on the accountable plan reimbursement, maybe we could start by if you are on the meeting right now, and just to get an idea of read the room type of thing, is if you're on the meeting right now and you currently use accountable plan reimbursements with your business clients, if you recommend it, you know how to help clients implement it, it's something that you use with real clients, maybe drop a thumbs up, or why not just do any emoji will work. Thumbs up if you're currently doing that.
Okay. We got
I see
David.
one thumbs up. Okay, Robin.
Let's do a test here. Do a thumbs up if you do S Corp returns. Anybody else in here? Serena, do you do S Corp returns? Marley, you do S Corp returns, right? You're in the car.
Yeah, don't do anything unsafe.
Yeah.
Marley, come on.
Okay, we got a couple others floating in here. So
I'm trying to stop the video and I'm trying to talk and I cannot do either or because I don't know how to use the phone app.
Nice.
But I do S-Corp returns and I have a client
Okay.
that I do their accountable.
I think it may just be a thing. I think the majority of people in here do S Corp returns. Yeah, Wally put one.
That was my impression from being in the meeting, but maybe that's not an accurate.
Yeah, I was just checking like ability to participate.
Gotcha.
Well, we're getting some thumbs up in here in the chat as well. So okay, good.
So what would you say overall, you know, and maybe some of the people are newer to this concept. I think it's a really key concept myself from having worked with these kinds of clients. Could you give us an overview of, you know, what this is, what the benefit is, and why you think it's important?
So here's the major factor. Accountable plan will save your clients money. It will help you out in audit if and when you have one. And it'll also differentiate yourself from other accountants, because if the participation level that we saw from people that are going over an accountable plan with their clients is correct, which is maybe about 10%, that's how it is in the rest of the world. I've never had a new S Corp client that their old accountant was doing an accountable plan. And so the basics of the accountable plan.
Well, can you hold on one second. Can you repeat that?
Yeah.
So you've never had a new S corporation client that the previous tax consultant was doing an accountable plan?
Correct.
Okay. So by mentioning that, are you kind of implying or inferring that maybe the lack of doing that or similar types of strategies is one of the reasons that they were switching? Is that why you mentioned that?
Correct.
Okay.
Because it's when the client asks, like, what else can I do to save money?
Right.
And their old accountant's like, well, you're doing everything you can. Or they just don't give them any advice. And so, which has also led to this whole billing thing between advisory and tax prep only, which I do that's why I'm trying to switch to the advisory, because I do this for my clients already.
Yeah.
But that's why we've gotten so many new clients, and it doesn't work in my brain. I got to wrap my head around the way other people do taxes, because I think this is the only way to do taxes. It's the right way to do it. But as you get more clients, you're going to see that a lot of even S Corps are just tax prep only. They plug in numbers. They don't go over compensation. They don't go over accountable plans. They don't go over retirement plans. They just plug in numbers. Here's your form, sign it, and go. So when you bring this up to a client, it's huge, because it can save a lot of money and save you a lot of headaches in audit as well. And so in jumping into accountable plans, what does the accountable plan do? So there's two things with an S Corp, and I'm going to get technical. You've got accountable plans and unaccountable plans, and you'll see it on people's W-2. So an unaccountable plan means that there's no documentation, flat amount, like car allowance, $500.
Yep.
That goes in their W-2. The company gets to write it off. The employee has to pay tax on it, but you also have to pay half you got to pay the Social Security and Medicare as the employer on it as well. So that's unaccountable plan. It could be for phone, it could be for cars, home office reimbursement. If it's unaccountable, it means no documentation, just flat amount. That's the way you do it. Goes in their W-2. You still get to write it off, but costs you 7.5%.
And also the employee is having to pay tax on that as
Correct.
Right. Okay. So because with the S corporation, right, a lot of the employees are the shareholders, right? So Correct. It's kind of like you're getting hit both ways under that. That's a very not desired thing, right?
And your goal on single member S corps, which I'll focus on that because I think that's the majority of the clientele in here, would be one employee S corps, maybe.
One or two, right?
Yeah, and the second one's probably either the wife or kid. And so with the unaccountable, it defeats the whole purpose. because you're paying self-employment tax and income tax on the money, which is one of the main goals of the S Corp, is to save self-employment tax by doing the payroll. So to get out of that category, which also shows you how bad it is and why you have to follow the rules, because if your accountable plan gets deemed not accountable, you got to go back and they hit you hard. And it stinks because it's an income deduction on the personal return, but for the company, it's a payroll tax fix, not an income fix. And so you're going to owe back payroll taxes, which has way higher penalties. So that's why these need to be administered properly. And so what an accountable plan says, and it needs to be in the corporate minutes, and that's the only proof that it exists, is that in the minutes, and in audit, they'll ask for the minutes showing that the accountable plan was set up. In the minutes you put, we have an accountable plan. Employee needs to submit their expenses on this time frame. So your time frames, according to IRS standards, they like 30 days or 60 days. But that's what's actually listed on the instructions for setting up an accountable plan on the IRS website, 30 or 60 days. That's not really, single owner S Corps are not that different. So it also states that you can do any other reasonable amount of time. So most of mine are on quarterly. You can do twice a year, or you can do yearly. I don't recommend yearly because stuff gets missed. They need to stay on top of it on a quarterly basis, really, to take advantage of it, because you're trying to get away from the taxpayer, especially with S Corps, trying to come up with a bunch of stuff at the end of the year. It's a headache, it's a waste of time, and even if it's an hour each quarter to do it, they're not going to have the 4 hours at the end of the year. That's even trouble I found in my practices, is I'm like, oh, I'll do that later, but I say I'll do that later 4 times and each one takes an hour. I don't have a 4-hour block of time I can get something done. It just doesn't exist. So I try to get them on a quarterly basis, if not more. And what accountable means it's accountable. It means that the expense is documented, date, what it was for, who it was for, and amount. And this is where the spreadsheets come in. And they will want receipts. I've gone through audit on a C Corp, on an accountable plan. This is a fun story. This is what you will encounter in real life. My client set up a C Corp, set up a bank account for the C Corp. He likes getting his Amex points. Didn't get an Amex under the name of the corporation. Just kept using his personal Amex. Or actually, he had a credit card for the corporation. It didn't offer points. So he just kept using his personal Amex for all of the expenses for the corporation. And when you get into a C Corp audit, they differentiate. If it's paid outside of the C Corp, there's no little journal entry at the end of the year or anything like that. Now, the thing that saved our butt was that he paid that credit card off every month. So there was an accountable. There was a direct dollar amount that came out of the corporate checking account that paid off the credit card. So that was accountable. That was an exact number that went across. Wasn't a journal entry at the end of the year. Now, also, he did supply to me minutes that set up his accountable plan when the corp was incorporated. And then did we have to download the Amex into an Excel spreadsheet every date? They went through it with a fine tooth comb. Wanted a receipt for every single one. And then even meals, entertainment, everything else on it. We had to have descriptions of who it was with. All the same rules apply. It was fully accountable. But this guy ran literally like 95% of the operating. It was like $150,000 in expenses through his personal credit card. So that's where we really need to get diligent on our clients to double check. Too, I've had several in QuickBooks come to find out all the S Corp credit cards that we're downloading into QuickBooks, everything else, they're all in the person's personal name, not in the company name.
So the agreement part of it in terms of what you would put into your corporate minutes, and then I posted you guys to like a simple agreement template type of thing, is like, hey, we'll reimburse employees for business expenses, right, that they incur. So I think of it very similar as like submitting an expense report, right, to to your employer, right? Like, hey, I spent this, it's business related, I need to get reimbursed. So getting reimbursed and what Daren are because there seem to be a few main expenses, especially for the like 1 to 3 shareholder type S corporations, especially. Like there's kind of like common expenses that this technique is used for. So we can kind of like get the 80-20 of like what are the most common ways that this is used in real life.
So the most common first one is cell phone, because they may or may not be paying. Generally on a 1-person S corp, the cell phone's probably got like 5 lines in it, and so either your client was writing off the whole thing, which I don't check the phone. So if they're paying the whole bill through the company, cool. But if they weren't, and a lot of them be like, well, the phone wasn't in the company name, so I didn't even pay it out of the company. So that's a big ticket on the accountable plan. Also, it can be a little bit more dialed in because you can reimburse just for their line. So it's a little bit more specific. Second one is home office for an S corp. If they're working from home, the home office is a biggie. They can calculate home office and get reimbursed for it. And it's basically just like home office deduction when they're a Schedule C. It's the same thing. Square footage office, square footage house, operating expenses for that month. And then you can kind of on that one come up with a template for the home office, and everything will be the same as far as the mortgage will be the same or the rent will be the same. There's a lot of fixed costs when it comes to the home office.
Yep.
The only one you got to watch out for is utilities. That one may change, but that's a big deduction. That can be 5-6 grand, even 10 grand a year for a client. That saves $2,500 and saves money on the corporate side as well. And so with that not being taxed, so that one and mileage. So if they don't have the car in the name of the corporation, they're not supposed to fully deduct everything else in the name of the corp. So check to see where the vehicle is at, and it also you don't get mileage reimbursement for corporations inside the corp. So I've got a lot of clients that have an older car, but they put on a ton of miles every year. So you can actually come out way ahead reimbursing mileage for your client through an accountable plan than writing off the actual expenses of the vehicle in the corporation. If they're doing high mileage, way bigger deduction, because I've actually seen it to where, incorporating and putting the vehicle in the business actually costs them, several thousand tax dollars because they don't get to take that high mileage deduction anymore.
Yeah, so let's take a second to think through, like, so when Daren mentioned, hey, new S corporation clients, we've talked about the value of these clients in the marketplace in terms of the prices that are, charged and what the work is worth, right? So you're getting a new client, minimum like $2,000 a year or something like that, $1,500 to $5,000 type of fee level, right? We immediately want to justify any fees that we charge by having the client save more money, right? So that they're happy and they're like, I'm glad I'm paying you $2,000 because you saved me $10,000. That's the ideal thought process, right, of working with a business client. And so the accountable plan, if you just look at those expenses that are, that Daren just named, cell phone, home office, and even cell phone could be, like he said, maybe there's family plans involved. You're really getting into how can you add deductions to the tax return without doing anything illegal. So you're still backing things up properly. You're doing things properly. So if you've ever had the question, like, I remember when I was working with Adam Shea, Daren, on the initial Business Tax Verified program, I was like, man, you got to tell me, first of all, Like, how do you do a home office with a corporation? Like, seriously, like, tell me what is going on, man. Like, I need to know this, how it works. So this is how that works. This is how you bring that deduction correctly onto the tax return. And so if you see that, hey, you're now saved your new S Corp client $6,000 by doing this, right? By bringing these expenses in. What about the other 2 years, right? That are in the amendment timeframe, right? What about those extra thousands upon thousands that you can save? How do you look at that part if this has been missed?
The only one I try to make up on being missed, because it doesn't look good on an amendment because of the time frames to record keep these and for the payments to be made out. I don't go back 2 or 3 years.
Gotcha.
Because you could technically go back and reclass it. Well, let me tell you how to do first year first. Here's the catch up for the client, where you can look at the client and be like, okay, I'm going to save you like $3,000 right now. You've got 80 grand in owner distributions. Go back through the personal credit cards. Here's the worksheet. Use the worksheet that Andy put up here. Give it to your client, say, put in the home office for the whole year. Go through the personal credit cards, run the year end, whatever. I was also going to put on here home internet and meals are other two. Usually there's a lot of meals on the personal credit card.
Right.
Also, they may have an office, but they're not paying themselves back for the home internet. So those are two biggies as well. So I give it to them. I make them fill the whole thing out. And then, yes, I will change owner distribution. And what I try to do, hopefully it works out. The best way it could work out is they made an owner distribution towards the end of the year, and you can reclass like that check so that I have a physical check, not just a journal entry backing it up. But if you can't do that, then we reclass part of the owner distribution to this accountable plan and take the deduction.
Thank you for joining us on the S Corp journey. We hope you enjoyed our sessions. We are now gearing up on season 4, where we will cover bi-weekly mini audio clips of the step-by-step Schedule C tax prep process. If you are interested in accessing the full audios with videos and becoming part of the Dream Team community, please visit prontotaxschool.com or email us to support@prontotaxschool.com. Being a member of the Dream Team comes with access to expert support, top-rated training programs, and weekly live video sessions. We look forward to having you on board.